model based on our historical data, which shows that Nestle has been efficiently paying a dividend to its shareholders. Integrating a conservative approach of Gordon's growth model, giving us a perpetual growth rate of 8.4% with an implied price of 1,064 naira. Relatively, our average price to earning across board stood at 27.4 times, and this gave us an implied price of 1,701. Also, our enterprise value to EBITDA, considering an average forward of 11.5x times, with an implied price of 1,092. Back to you, Ayo, to wrap up our valuation summary.
Thank you, Bashir. So our valuation blend gives us a blended price of 1,197 naira, and this translates to our 12-month target price of 1,369 naira 61 kobo. Obviously, this reflects an upside of 16.6% relative to the current closing price of 1,175 naira. So, and we also expect that Nestle's dividend yield will be 4.8% for the final year ending 2020. Also, and this sums up to a total shareholder return of 21.3%. So I'll hand over to Karen to take up the investment risks.
All right, thank you, Ayo. However, with any company, there are some investment risks, and one of such risks is credit risks. But Nestle has been able to mitigate this by purchasing a credit limit, as well as categorizing its customers according to their credit ratings. Another potential risk is stock liquidity risks, and you may be unable to exit. But Nestle has a premium stock that yields a higher value. Now, another possible risk is forex rates, but Nestle has been able to source 80% of their raw materials from the local market. For interest risks, Nestle is ensuring that its international and national borrowings are on a fixed rate basis. Thank you. Over to you, Sam.
Thank you very much, Karen. I'm going to be analyzing the operational risks and how it affect Nestle from operating at optimal capacity in Nigeria. The first year of security risks. Security risks affect in the distribution and also increase cost of production and also affect the reduced profits. Nestle has been able to mitigate against this with the backward integrator that gives them control over their supply chain. We also noticed the weak consumer spending. That's shows the GDP growth decline and the general economic effect. So Nestle will be able to mitigate against the diversified product base and innovation around sachetization of their product. COVID-19 risk also shows shows a very great risk here, but we've been able to, and this also implied a lower revenue and low earnings due to the perishable nature of Nestle Group and FMCG Group generally. But Nestle, we are having a prospective mitigant with the growth of e-commerce and the B2C model in the COVID-19 era, and also adopting the code integration model. Back to you, Mary.
We hereby rephrase our buy recommendation with Nestle Nigerian PLC with a 12-month target price of 1,369 naira 61 kobo, and that's like an upside, a 16% upside from the current trading price, which is 1,174 naira as at 18th of September 2020. Thank you.
All right, thank you very much, members of Group D. Yes, you said you were actually prepared, and I can see from your presentation, wonderful presentation. Good work, guys. I leave you to the hand of my judges for the next 10 minutes. Over to you, judges.
Hello, guys. This is Dara. Well done. Wonderful presentation, timely delivery, beautiful slides. What I want to ask is, where did you get the risk premium of 6%, equity risk premium of 6% in your valuation?
Okay, thank you for that question. So our first approach was to check the Swot equity risk premium, and it was 12.8%. However, that was computed at about July, and
no, it's 16%.
Sorry,
it's 16%.
No, for Nigeria. For
Yes,
Nigeria,
equity risk
12.8.
premium, not country. Okay, are you saying country risk premium or
We are
equity risk
talking about
premium?
the equity risk premium. I think it was
No, it's same
12.8%.
percent, but just go on.
Oh, okay. Well, but that it was computed at about July, and that was at the heat of the pandemic. So I feel like a lot of the risk attributions that were attributed to COVID-19, since we are at the heat of the pandemic then, where I believe that is a very high premium. And despite the aggressiveness of that premium, we believe that multinational companies are not as exposed as their peers to country risk. So we adjusted it to match the local markets. And we also believe that the health of Nestle's operations, that is based on their historical, earnings and profit, revenues and profitability, we feel like, and cost management too, we feel like Nestle, like we couldn't justifiably attribute that risk premium to Nestle.
Let
Okay,
me quickly add to that.
okay.
Let me quickly add to that as well. Like as you said the equity risk premium on the Damodaran website is around 16 points. But based on our research, we were able to find out that there is a particular paper published by Damodaran which says that companies that are far like that are at the maturity level over the country they are operating are not supposed are not supposed to be on the country risk premium should not reflect on that, because the country risk premium is a reflection, as in the competition has to do with the competition, and the competition has to reflect it. So
I'm
it
not
has
sure I
does
can
not.
hear you clearly. Please,
Oh,
can
I'm
you
sorry.
adjust your network?
Can you hear
Yeah?
me? Can you hear me?
Yes, I can, but then at some point I couldn't hear the words clearly.
Yeah, just to just to say what he's saying. So we read a paper by Swot Damodaran, and he talked about companies, especially multinationals, and he specifically mentioned Nestle, and he said that companies who have maintained that high level of operations and who have like an international backing, so to speak, like cannot justifiably, like you cannot justify that like the country risk, like for instance Nigeria's risk to Nestle for it. I hope you get what I mean.
Okay. So what informed your adjustment? Okay.
Hello.
Go on,
Yeah.
Yinka.
I think one of the team members was saying something about maturity, right? That when the company is at maturity, then you should not be using the same country risk premium, right? So if that is the case, I'm looking at your perpetual growth rate. You're saying your perpetual growth rate is 8.4% for a company that is at maturity stage.
Exactly my point. What justifies that growth rate?
That was a miss. What's it called? That was a slip of the tongue actually, because I actually means that Nestle as it stands, we observe that Nestle, based on our financials and the what's it called, the multinational expansion of the company, like we believe that Nestle is at is part of those companies that can be regarded as a mature firm in an emerging market, as Nigeria, as so to say Nigeria. So that's why I said it's like a mature firm comparing to an emerging market in like Nigeria. That's why.
Just to buttress that point.
Matured, sorry, if you are calling the company matured, so that means they've plateaued. That's what it means at a particular level. So how can you justify an 8% growth rate in an economy where Nigeria is growing by less than 2%?
Yeah, sorry.
So
let me.
How can you justify 10%?
Yeah.
Yes.
So our perpetual growth rate is a function of our terminal growth rate from our Gordon's growth model, which calculated by multiplying our estimated return of equity, like the average over the next 5 years, and the retention rate, right? So we got a terminal growth rate of 9.8% actually, but given that Nestle operates in Nigeria, we also use the expected GDP growth rate. Our expected GDP growth rate is 3%. So we weighted the terminal growth rate 80% and the GDP growth rate 20%. That was how we got our perpetual growth rate of 8.4%. So we factored in the factor.
When?
Yeah.
Over which period? Over which period are you expecting Nigeria to grow by 3%?
We can hear.
Over what period are you expecting Nigeria to grow by 3%?
Well, in perpetuity, essentially. It's pretty conservative.
Okay. So how do you come about the 3% that you're expecting? Do you just pull the number out of thin air?
No, we didn't pull the number out of thin air. Nigeria
So
has a historical GDP growth rate of about 2%. So, like, to just for
2%? Are you sure? Are you sure?
Yeah.
Are you sure 2% is Nigeria historical growth rate?
I mean, on
Are
an
you sure?
average.
That's the question. Yes or no? Yes or no? Are you sure it is 2%?
I know it's not 2%, like on
So
the
why are you
point,
telling me
but
2%?
around 2%, yeah.
Oh, are you sure it's around 2%? That's the question again.
Yeah, from my findings, that's
where did you get your findings? My
Over
question
what
is, are
period?
you sure it is 2%? Yes or no? Just tell me yes or no.
Okay, yes, I am.
Yes, yeah, sure. Oh, okay. Thank you. Dara, you can continue. Sorry.
No, I think you just asked my question. I was going to check the growth rate and then the risk premium. And then how did you adjust the risk premium to 6%? Did you just slash it in half and say, oh yes, it's supposed to be half of the country risk premium?
Well, that was our assumption. Sorry, I don't have an answer to that question.
All right, no problem. Maybe if any other person has a question, I'm done.
All right, Latif.
Sorry, what? Okay.
Okay, Yinka, yes. You can also go ahead.
Oh, okay. Thank you. So what's your target price for Nestle at the end of the day, please?
Yeah. Our target price for So our target price for Nestle is 1,369 naira 61 kobo. 12-month target price.
12-month target price. You're saying, but if I buy Nestle today, in the next 12 months, is that what you're saying? I'm going to the price will have rallied to 1,369. Is that what you're saying? Or you're saying by December year end? Oh,
no, by
in the next 12 months. Huh?
Yeah, in the next 12 months. Yeah.
In the next 12 months. So what valuation metrics did you guys use?
We used the DDM. We used the DDM. We also used the price to earnings multiple. We compared Nestle to its peers in Nigeria and sub-Saharan Africa.
You used the DDM. Your DDM gave you 1,006.
Yeah.
Your price to earning gave.
Sorry, excuse, is anyone hearing him?
No.
Oh, okay. Sorry, I'm pretty nervous. Hello, Yinka.
Okay. I'm not sure Yinka is. I think Yinka has a bit of network. Abdulatif, do you have any question before Yinka will connect?
None for now.
None for now. Okay, cool. So I guess we just try to hold on for Yinka. We have about 1 minute more. If he's able to connect back in time, we'll take him. We'll take his question again. If not, just move to the next group. Group C, you guys can get ready while we sort of exhaust the time that we have here, just to have that 1 minute for Yinka to get back on. I'm not sure it's going to connect before we wrap up. So we just have 1 minute more. We try to wait. Again, it's okay. Just a bit of an aside. It's okay to not have responses to questions. So it's better to say you don't have a response than to sort of muffle up your responses, because majorities will know if you are not speaking facts or what you're saying is just so that I can answer the question. So Yinka is not here. So yes, we've come to the end of questions for Group D. Thank you very much once again. Again, a round of applause from my hand. I move on to Group C. Group C, are you ready with your present? Now, Group D, yes.
Thank you so much, Wakil. Thank you so much, Yinka. Thank you.
All right. So Group C, you can come up your slides now. So start your presentation by 2, start exactly 2:03, and we have 15 minutes. So wrap up by 2:18. 2:18. Okay. So start
Okay, good
time.
evening. Good evening, everybody.
Afternoon.
Good afternoon, everybody. Sorry.
We can hear you loud and clear.
All right, my name is. Okay, all right. I believe everybody can hear me.
Yes, we can also see your screen. By the time I started.
Okay, can everybody see my can everybody see my screen?
Yes, we can.
Okay. All right, thank you. Thank you so much. So my name is Nwogo Frederick, and I am the CEO of Pentagon Capital. So Pentagon Capital is a private equity firm that specializes in acquiring a 5% to 7% stake in large cap companies in emerging markets. So we decided to pick Dangote Cement because it represented everything we want in a company. So you might ask me why Dangote, and I'll ask you why not Dangote. Should I begin by telling you that Dangote is, I dare to say that Dangote is the biggest cement company in Africa and in the Middle East, North Africa, with a market capitalization of 2.3 trillion naira as of September 11, 2020. Dangote Cement is the leading cement producer in diverse regional markets with excellent growth prospects. It's an industry leading margin. It possesses industry leading margin that drives excellent returns with strong balance sheet with low net debt. Also, Dangote Cement provides a unique investment opportunity, offering exposure to sub-Saharan Africa's growth potential. Not adding to that, Dangote Cement possesses significant competitive advantage operating in local markets. So right now, I will hand over the business description to my colleague, Rama Adefowope. Thank you, Rama.
Thank you, Frederick. I'll be taking the company overview. Dangote Cement PLC is a multinational publicly traded cement manufacturer that exists in Nigeria with their headquarters in Lagos. Dangsem operates in 9 other African countries with like very, very good financials and in excess of 2.2 billion US dollars. Dangote Cement is known not to be owned by a particular person, so it has like a shareholding structure of which Dangote Group Limited has the highest stake in it. Next slide, please. So this slide shows the countries where Dangote Cement operates. Dangote Cement, as I said earlier, operates in 9 other African countries, with Nigeria inclusive, making it 10. So the production capacity varies, of which Nigeria's production capacity is the largest. Countries where Dangote Cement operates also shows that the revenue generated from like each countries is one that looks fantasizing, and Nigeria has like the largest revenue generated, of which it is about 68% in calculation. Dangote Cement PLC has a very fantasizing business model of which they put together to ensure that the needs of the masses is satisfied. And that is why they have varieties of products in stock. One of which is the 3 times cement, which is extra, which has extra qualities of which makes people want to buy more. So that is like an extra advantage for them, as a lot of people have reasons to patronize them on that particular product. Permit me to pass the mic to Obiajulu.
Good afternoon, everyone. I'll be taking the SWOT analysis for Dangote Cement. So I'll be starting with the strengths. Dangote Cement is part of the Dangote Group, and it is the world's leading. It has the world's leading sub-Saharan African. It's the world's leading sub-Saharan. Sorry. Please let me take that again. It's the leading producer of cement in Africa. Its cement plant in Kogi is the largest in Africa. They have a wonderful, effective distribution channel for their cement of over 9,000 fleets. Then I'll be moving on to the weaknesses. Dangote is small compared to its peers. Like one of its greatest competitors is Lafarge. Currently, Dangote is operating in just 10 countries, but Lafarge is operating in over 90 countries, which that means they have to improve more. Then there's an over dependence on the revenue from Nigeria. Dangote should look more into diversifying into other countries. Then I'll be looking at the opportunities. There's actually a rising demand for cement because in the past bitumen was used frequently, but now there's a rising use of cement because from my findings I found out that bitumen can last for like 17 years, but cement lasts for 25 years and more. So there's a rising demand for cement. Then global expansions to other countries. In my weaknesses, I mentioned that it was only in 10 countries. So I see it as an opportunity. Dangote should take advantage of this and go to other countries. Then there's also the opportunities for mergers and acquisitions to strengthen their market share. Then for the threats, I'll say that environmental effects, for example, flooding and all, then there are some unrest in some local communities. Then regulatory requirements, the regulatory laws are very, very stringent. So that poses as a threat to Dangote. So I'll be passing this over to Tife for the corporate governance.
Hello, everybody. Good afternoon. Thank you, Obiadulu. Thank you, Rama. Thank you, Frederick. Okay. So for the corporate governance, we can see that their board of directors have an average of 32 years experience. On their board of directors, they have 2 females and both are lawyers, which is good. And they also have the various experiences among their board of directors. We have people that studied engineering, we have industrial chemists on their board of directors, we have accountants on their board of directors, which is actually very good and shows that Dan Cement is forward thinking, and if anything happens, they have lawyers, they have accountants, and they have people that are experienced in the field to take care of them. Please, next slide.
Hello, Tifa, are you there?
Frederick, please, next slide.
Okay.
Okay, I would use mine. Hello?
Hello.
Can you hear me?
I can hear you.
I can hear you. I can hear you.
Okay. Okay, yeah, please, thank you. No, yes, over there. So for their corporate social responsibility, Dangote Cement has donated over 100 million in charitable funds in Africa and Nigeria. Also, they have 3 key areas where they focus on. They focus on the environmental care, health and safety, and social investment. And the company also supports the education, health, and empowerment in the host communities. These are communities that they either source their raw materials or their factories are based in. Also, for Dangote Cement, they have what they call the Dangote way for their approach to sustainability. And this is their unique way of doing sustainability across all their operations. And this is core for their procedures and corporate culture. Please, next slide. Please, next slide. Okay. Dangote Cement has the corporate governance assessment from the OECD of 93%. And this shows that the governing is actually in line and it's very effective. Because on their board, they have 2 women on their board, they have 50%, and most of their board of directors do not have 50% direct or indirect shares to Dan Cement. And they're in accordance to OECD operated. I would like to pass the industry overview to Victoria.
Thank you so much, Stephen. Thank you, everybody. So I will be talking about for the industry analysis, I'll be talking about the key revenue drivers. So firstly, in terms of the industrialization, we know that Africa has the highest potential for rapid industrialization. In terms of infrastructure, as economy grows, there is a strong demand for infrastructure. For looking at Nigeria now, for example, we have a huge infrastructure deficit. Looking at, for example, let me take in terms of road construction now. In terms of the paved road, we have about just 10% paved road and we have about 70% unpaved road. You can get this information in our appendices. Then also in terms of mineral resources, Dangote has positioned itself in countries where there are like huge supply of limestones, which has made its operation efficient and all that. Then also looking at the demand for real estate for houses, there is housing deficit in Nigeria. If you're going to look at the urbanization rate as at 2019, it was 50%, which shows that there will be more demand for houses in Nigeria. Now, looking at the road construction, just like my colleague said earlier, there has been a shift gradually to cement being a preferred option in construction of roads. Even we can see that in Lagos, the Oshodi Road, Bagada Road, that has been used with cement. Also, there's some major roads in Port Harcourt are being constructed with cement, and also in other parts of Nigeria. Next slide, please. So I will go on to talk about the Potters 5. So now in terms of the threats to the new entrants, we have, it is low because of the huge entry costs, huge capital outlay required for potential players to come in. And also when we talk about the customer power, it's moderate. Why? Because looking at the prices of the cement, are actually fairly the same across, amongst the different players currently, and also the products are actually standardized by the Standard Organization of Nigeria. So this means that the products should almost be the same, but of which the truth is that Dangote has an edge over other players because it is highly preferred based on our research in the terms that it dries faster and quicker and sets faster than other cements. Also, in terms of the supplier power, it's low. Raw materials, the raw material is extracted or imported by the players. And also in terms of on that supplier, Dangote has because it's a major player, it can influence prices in terms of the supplying. Then also the threat of substitutes is very low because substitutes available are like ash, which are not readily available in large quantities. Also for the competitive rivalry, we have an advantage that Dangote has in terms of the high business integration, in terms of the fleet they have, in terms of their huge production capacity of 45.6 rather, and also so yeah, moving on to, please, I'm passing the mic to my colleague for fundamentals.
Thank you. All right, so we don't have much time again, so I'll go straight to the evaluation. We used the discounted cash flow analysis to get our result, and our discounted cash flow analysis gave us a target price of 167 oh God, what am I saying? Oh God. Give us a target price of 167 naira. We also used the comparative company analysis, which gave us a target price of combination. We used the PE multiple, and we also used the EV to EBITDA multiple. Now, if the combination of our comparative company analysis gave us a target price of 193, so we assigned a 70% weight to our DCF. Because DCF is a true measure of valuation because it measures the intrinsic value of a company. We assigned only 30% to our comparable company analysis because relative valuation is a market-based valuation, which makes it vulnerable to skewness during periods of irrational exuberance or bearishness. And also, comparative company analysis fails to capture the target specific strengths, weakness, opportunity, and risks. So that is why we assign a major weight to our DCF, because we really wanted to find out what Dangote cement is really worth. So if we going by that, we arrived at a target price of 175, which is a 25% upside. So we are recommending a buy because the upside is above the asymmetric corridor of the CBN MPR, which is currently, the last time I checked, it was 13.25%. That's the CBN MPR. So our upside is 25%, which is greater than that. So we are giving it a buy. So that is our presentation. Thank you.
All right, thank you very much, guys. Thank you very much, Dan. Same stock page. I think you guys have a name. Yeah, so again, wonderful presentation. We would move over to the judges now for their questions. Hi, Abdulatif, Inka, Dara. Any question? Okay, I can see Yimka. Okay. Nika, you can go ahead.
I was waiting for the others to ask. So, yeah, hello.
Okay, you can hear you.
Yeah, thank you for the presentation, guys. Can you go back to your evaluation sheets, please? Your evaluation slide.
Put everything in the appendix.
Your evaluation slide, please.
The main thing is in the appendix. It was just the summary that was in the slides.
Just show me your evaluation slide. Show me what you need to show me.
Okay,
so what valuation method do you guys use? We
use the discounted cash flow analysis.
What valuation method do you guys use to value Dangote Cement?
We use the discounted cash flow
relative
analysis
valuation.
method.
So for your relative valuation, so what metrics did you use in relative valuation?
We use the PE multiple, and we also use the EV to EBITDA multiple.
Why did you guys choose those two metrics? Why not something?
Sorry, sir, I didn't hear you.
Why those two metrics? Why PE? Why EV to EBITDA? Why two metrics for relative valuation, please?
Okay, because the price to earnings multiple tells you what investors think about a particular stock. It tells you the price they are willing to pay for a particular the price they are willing to pay per unit of a particular per unit of a particular share.
Wait. Did you just pick it because you feel that's like probably that's what you know? Those are the two metrics you know, or why? That's the question. I'm not expecting you to explain what it means. What informed your choice of those two metrics for relative valuation?
Okay.
Do you have an answer? Please.
I really don't have an answer for that. It was just I used the PE
okay,
to
thank you. So you arrive at relative valuation, and you arrived at discounted cash flow. What form of discounted cash flow did you guys use?
What form of discount? We use the terminal value perpetuity growth method.
Hello. What form of?
We use the unlevered free cash flow.
Is it the free cash flow to firm or free cash flow to equity?
It's the free cash flow to.
Question, is it the free cash flow to?
No, it's the free cash flow to firm, sir. Your voice is really low. I'm not really hearing you like that. That's why.
Oh, okay. This is your discount rate. You got 16.83. I can see your discount rate at 16.83.
Yes, sir.
How did you come about this 16.83? Can you show me?
Okay, so,
Can you show me?
okay, sir. We use the capital asset pricing model to get our cost of equity, and we first got our risk-free rates, which is the Nigerian's 10-year long the yield on Nigerian 10-year government bond. We also found out of the equity risk premium that I was the one when I checked for equity risk premium from Swot Analysis, what I saw for Nigeria was 10.63. I believe the one I saw, maybe it's predated, and we got our pre-tax cost of debt by using the average of the effective interest rates on Dangote cement and borrowings. Then we calculated our cost of equity. We got our beta from Bloomberg. We got our beta from
Okay.
Bloomberg.
In order not to
Then we
waste
got
your
our
time,
debt, cash, and every other thing
right?
from the
In
company's
order not
financial
to
statements.
waste your time, can you hear me? So in order not to waste your time, so basically I'll ask you one question, then probably the other judges will ask their other questions too. So the question is, there are three major players in the cement industry in Nigeria. You have Dangote Cement, you have Wafco, Lafarge, and you have Boa Cement. Why did you pick Dangote Cement? Why did you pick Dangote Cement or select Dangote Cement for a stock pitch? And why are you bullish on Dangote Cement? In 1 minute, if we can answer this question, please, in 1 minute.
Okay, let me answer the second one you asked, sir. You said, why am I bullish on Dangote Cement? Okay, first of all, I would like to say that Dangote Cement has proved to have defensive earnings
Hello,
quality.
are you there?
I'm there. I'm talking.
Hello.
Hey, Yinka,
Hello, I'm there.
Hello,
I can hear you.
Hello, Yinka, can you hear me?
I can hear you. I'm talking.
Hello, Akil, can you hear me?
Yinka, I can hear you. Can you hear him?
Hello,
Okay.
Yinka.
Not sure. I could hear Frederick. I can hear Rahma. I'm not sure Yinka is connected any longer. So you can go ahead with the response, Frederick. He was asking, okay, you want to go? Okay.
Okay, simply put. Hello, can you hear me, Wakil,
Yes, I
or
can hear you.
whoever is speaking?
Yes.
Okay, simply put, if I heard this question properly, he wants to know why, like in simple sentence, why we picked Dangote Cement. And the reason is simply because Dangote Cement has significant competitive advantage operating in local markets. So for those competitive advantages, we felt that even in the situation of risk, even in the situation of losses, these advantages could help Dangote Cement subside whatever problems they are going to face as a result of whatever risk or market disabilities they face subsequently.
Okay. Dara.
Hello, can you hear me? I just want to ask, how did you derive the equity risk premium of 10.63? Can you hear me?
Yes, we can hear you, Dara.
How did you derive the equity risk premium of 10.63?
I don't think they have a response because I can't see any movement or any response.
We don't have a
Because
response.
10 points, you don't have a response to how you got the equity risk premium.
That was moved from Bloomberg.
From Bloomberg. Okay, this is looking like what the Moderna had for risk premium in January. So that's why I'm asking you where you got this from. But if you don't have an answer, that's fine.
No, Abdulatif.
Hello. Hello.
Yes, we can hear you.
Yeah, nice presentation, guys. Quick question, please. What's the current share price?
As at yesterday was 135.
Okay, your target price is what?
$175.
Then what was the 12-month average for the last 12 months?
Hi, Abdulatif. Can you drop maybe one after the other, like without having their responses immediately, so that we know the number of questions they didn't respond to because of time?
Okay, so my question are two really. One is for the 12-month average, if the value is lesser than this 135 or greater than, what were the major drivers for those for the two values? And going forward, what are your drivers and how do you compare those drivers to the previous 12-month drivers for either the underpricing or overpricing?
Thank you, Abdulatif. Rahma, do you have
We've noted that. Can we